Let's get in a fundamental view going now on the show on Street View. Dilip Bhatt, the Joint Managing Director at Prabhudas Lilladher, joins us right now on the show. Dilip, good having you. Thanks so much for taking the time out and accommodating this interview request. What's the sense, Dilip? We've heard a few people probably playing contrarian or otherwise, but now talking about distinctly bullish levels from the next 3 month to a 6 month perspective, irrespective of what happens to the rate cut cycle. What's your sense?
Thanks a lot. Very frankly, I think, Neeraj, we probably will continue to see a lot of apprehension in the markets. I think that's going to remain for some more time to come. The main thing very clearly, as what RBI also has pointed out, is that it's not merely the rate cut which is really going to drive the economy. It's really something more which is required. I think even at the time when the inflation was going up, we all realized that despite the rising interest rates, they could not contain the inflation. So similarly, I think one thing is very clear, that the economy which has, the growth which has slipped very badly, probably will require something more to really push it up. So what happens is, even at 6.5–7% growth rate, Neeraj, I don't think that there is enough momentum to be given to the corporate earnings. So as such, though a lot of people say that at 12.5–13 times forward earnings, markets look cheap, I really don't subscribe to that view. I think it's also, one has to see what is the corporate earnings growth, how that's going to pan out. So long as that remains muted, I think it will remain more on the bearish side, and it will remain more of a pick and choose kind of market. So I think in the coming few months, maybe over the next 6 to 9 months, I do see that index probably slipping below 5,000, closer to 4,500 also.
Dilip, do you fundamentally like the cement space after the kind of rally that we've seen in the sector?
Well, I think I've not really exactly followed what is the final order on this cartelization issue, because I was slightly in a meeting. But I think even if one were to take that out of the picture after some time, I think cement probably still looks pretty good, because there are not great capacities which are coming up. And even in the bad times, they have been notching up something like 1,000 rupees as an operating profit per ton. And more important, all the cement companies have been generating good amount of free cash, which is a very big driver for the stock. So I think in the coming few months and maybe over next 1 year also, cement should look a very interesting space to invest in, particularly Gujarat Ambuja Cement or say Shri Cement, the two stocks which probably remain pretty good and interesting.
Dilip, we are still awaiting that CCI order. The meeting is currently underway and the stocks indeed are getting a little volatile. But what is your take on Reliance Industries, Dilip, and whether or not we are going to see any turnaround, because slowly the news flow indeed is getting positive on the company?
Well, I think the stock has corrected quite a bit, and probably at best from the current levels it will languish with a slightly downward bias. But I think all in all, we all know that the gas production is one which is really going to decide the fortunes of the company. And my own view is that the price hike on the gas should happen sooner than what a lot of people think. And I think on the back of it, probably even the production will improve. So taking both these factors into account and considering the fact that gas is such a cash generator for the company, I think Reliance on the current level, I think on the risk-return basis, appears more in favor of the returns than the risk.
Dilip, what about RCOM? I mean, the Veritas report today slamming the company's governance, targeting, given the target of 15 rupees, without getting into a specific target. But what do you think the view on RCOM is? You think it's slated to go further down by virtue of all that's happening, fundamentally with regards to the FCCB and otherwise, or you think at around 60 it finds some adequate support?
Well, I think around the current levels, my own view is that it will find a good support, because all said and done, I think all the kind of headwinds, all the negative news, whether it was something to do with the fundamentals or otherwise, they are all really beaten the stock black and blue. So I think taking that into account, if one were to see that it has some basic inherent subscribers in terms of the numbers, I think all in all, probably the worst is more or less reflected in the price. And even if there is some kind of a strategic sale to generate some kind of money so that the company is able to tide over the financial need that it has at the moment, I think all that possibly can add up to the value of the stock. So from the current levels, I would still look at buying the stock rather than selling off from the current levels.
Okay, and Dilip, I remember the last year and a half or 2 years ago, you have been a contrarian buyer when it comes to certain banking names, particularly the PSU banking names. I can remember a central bank off my hand, a couple of others as well. Are you liking or are you buying into some of the mid-sized PSU banks currently, or you're still staying away?
I think two stocks which really comes to my mind at the moment. One is the Union Bank, which probably has seen the worst in the last 2 years. And our own sense is that in terms of asset quality deterioration, the worst is behind us. And probably we may not see those kind of provisioning required. So I think that's a stock which probably can in 12-13 report ROA of more than 1% and possibly an ROE of around 20% and a good growth in the profit, because pre-provisioning profit growth was always good. So Union Bank looks a good buy. And another stock which probably we need to study a little more but looks pretty good based on the fourth quarterly number that it has reported and the full yearly number for FY12 is the UCO Bank. I think with a good management in place, I think that's a stock which probably from the current levels is available pretty cheap.